down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the savvy landlord as your host.
Hey, you tuned in what? To the radio show, Savvy Radio Show. My name is Steve VanCauwenbergh. Wild and crazy, in the mode, focused on real estate investing and helping other people be investors. So why are we doing this podcast? That's a great question. I don't know if you know this, but this is my great partner, wonderful person, friend, all things money, management, advice, accounting, hustler, entrepreneur, Rose Taylor. And I have clients that I manage, not clients for the accounting firm, in my own little savvy business called the Savvy Investors. I coach people. I'm fortunate to people pay me for random advice. And one of those things is like, they want to scale. They want to go to the next level. How do I write stuff off? How do I become a better investor? And that's kind of my topic today. And through all those weeks of blowing Rose up, asking these questions, she's like, we need to do a podcast. And it boils down to these things. How do we become better in a relationship with an accountant? How does that work? And I want to just preface this one quick thing, and then I'm going to shut up. But then I kind of twisted Rose's hand and said, hey, let's have a podcast. And then I just spoke with her 2 minutes ago, and she's like, oh, I got 5 tips. I was like, okay, you got 5 tips. My agenda is my guys, the folks, and some girls in there want to go to the next level, and there's a constant conflict that they feel like they can't go to the next level. And I want to elaborate on that, about not having your it together, not having your books in place, making accounting the stepchild of your life. And I am a hypocrite. I understand that. And I understand the dynamic with the accountant, kind of. So that's kind of my premise to this. But then Miss Taylor here is like, I got 5 tips. So we're going to stop the VanCauwenbergh talk. And then we're going to go into the Rose Taylor 5 tips. But Rose, I know you're very busy. I really appreciate your time. Thank you for helping myself and real estate investors. I'm going to say this live. I am not where I am today. The success that I have, if it wasn't for my accountant. And I'm not saying this because we want to make you a client. I'm not saying this because you're going to like Rose even more, because through me, the reality is I had a shit show, and I'm going to curse online because it was. And this young lady, gal, woman, I don't know how old you are, held my hand and slapped me around. And that's what we're going to talk about today. How do I help this young investor, or even a mature investor, thinks he's a savvy guy, get his ducks in a row? So what's our tips?
Well, okay, so we're just going to jump in.
Yeah, we can talk about whatever.
Well, okay.
I mean, I don't want to.
I think what prompted this and me saying, okay, we need to have a podcast, is because I've been talking a lot lately about tax planning is better than tax preparation. And it seems to becoming a reoccurring theme. So tax planning is about keeping more of what you make. Okay, tax preparation is me filling out the right forms based on what you did in the past and submitting it to the government.
So an example is I call you ahead. Hey, I'm thinking about purchasing this piece of equipment. That's tax planning, not at the end of the year handing you a receipt and say, write this off.
Yeah, tax planning is year round. Oftentimes by the time you give your forms to your accountant, there's not really a whole lot they can do. It's just, okay, well, this happened. This is how it's the correct way to report it.
So why do people think that way? Is that because that's how the industry handles it? Because they just think, because there's a lot of young investors think they can't afford a couple $100 a month for bookkeeping, which I realized from you, the couple $100 it's not it's like a cost of doing business, like my cell phone bill, but I save so much in taxes. Just like I learned the other day, if I buy this certain type of vehicle, certain weight, it could accelerate the appreciation. All right. Am I saying it right?
Yeah, I think that a lot of times people don't realize that your accountant has the keys to the kingdom, really. And it's an afterthought. We can open up a brand new business. We can open the doors. We can build clients, build customers, create revenue, all without having to do anything with accounting. So you can essentially build an entire business. And I see it all the time, people that have had businesses for years and they're running and operating. But there's going to come a point in time when you need to know your numbers and make decisions based on those numbers. So
do you think people are just afraid to pay for accounting, or they just don't know what they're paying for?
I think it's a little bit of both. It's some people look at it as not value added. It's like an unnecessary evil. Some people absolutely look at it as, I absolutely need an accountant, and they understand the value behind that. So I think it's a little bit of education process.
And that's what we're going to do today. It's like almost like, I wish I would have hired attorneys before and then not get in a lawsuit afterwards. Right. Or
kind of maybe you could have planned differently. There's something that you could have done along the way to avoid a lawsuit.
Right. I'm just, it's so hypocritical because I was that cheap guy. I can operate. Back then it was Quicken. Okay. I can save all my receipts. I don't, what am I paying a bookkeeper for? And see, I think that's another misconception is bookkeeper, accountant, data entry. Break me off some of that. And how does that affect your business?
I feel like we've talked about that before, but all accountants are not created equal. And there's a lot of different types of accountants, or in the financial world, let's say. There's a bookkeeper, there's an actual accountant, there's a tax accountant, there's CPAs, there's enrolled agents, there's financial planners. Those are all these people are in the financial world, but they all have very different skill sets. So, you wouldn't hire an accountant necessarily that is going to be doing bookkeeping type work. They may do all of that, but vice versa, you wouldn't hire a bookkeeper to do tax work.
So it's like hiring skilled labor versus manual labor. You get what you pay for. And in essence, if you get a skilled person, right? Yeah. Is that what you're trying to say?
Yeah, basically, in a nice way. But you said you get what you pay for, and I think I want to lead this. We want to lead this podcast into, just like every other relationships, you get what you put into an accountant relationship.
And that's what they need to hear. Guys, gals, you need to really invest in, your accountant. I love it when people interview me for coaching. Like, seriously, this has only happened a couple of times in my life. Yeah, we're thinking about coaching and we want to interview you. I'm like, what's the interview? I get results. Like, you may not like me because I'm to the point, like Tony Robbins on something, but the reality is, I think you're right. I think we just assume that we have to have this person. Let's pick somebody, and you may not jive with them. They may not be creative. They may not understand. And I think the biggest thing is the nuance. I don't mean to cut you off, but I know when a lot of people, I ask some of my friends, hey man, it's time to leave that, $50 a month bookkeeper and go on to get financials monthly. And they don't, I'm afraid to tell them my nuance. I'm afraid to tell them, I make $50 a month on eBay, and they're afraid to move because they feel like they're going to have to pay more taxes or pay more for fees.
I think that, when you're talking to accountants and interviewing them, I guess, integrity is really important. You want to find someone that you can trust because you're sharing sensitive information. And it kind of is a two-way street. We have to be able to trust each other.
So how was that established? I mean, anyone could be an accountant per se, right? Anyone could be a real estate investor. You know by interviewing that person, if you're going to feel comfortable with them, maybe do some research about them.
Yeah, maybe do a little due diligence, as I like to say.
It's on the cover of my book. Due diligence always pays off.
Yeah, I think if you feel comfortable enough to hire an accountant, you kind of have established to hire a certain accountant, you have already a level of trust established.
All right, let's get into how do you fire an accountant and how's that work? Yeah, I'm going to open this up. Ladies and gentlemen, we had no agenda except for her little 5 tips. And she's like, we're going to keep this to 20 minutes. Okay.
Well, because, no offense, but you can talk.
Yeah, it's cool. It's offensive. It's okay. But listen, how do I fire an attempt? How do I fire your ass? That's the question.
I would
and
say,
I noticed,
if finding your accountant is hard, but you want to make sure, or it's not, it depends on how shitty they are. But I mean, you want to make sure that you have all of your documentation that you need before you do
like
that
your QuickBooks
too.
file.
Yeah,
receipts.
You have all your logins and passwords, and you are everything that you would need to turn over to a different accountant.
But they're legally bound, right? Fiduciary to release this information. They can't hold you
Sure, but
hostage.
a lot of times, anything that like your accountant created themselves, that generally that's their work papers, and they do not have to give that to you.
Give me an example, like a spreadsheet.
So let's say that I created this entire complex spreadsheet on calculating your cost of goods sold.
Okay.
That's an internal document. That's my work papers.
That you do for formulating what you should be paying tax on this manufacturing business.
Sure. Yeah.
Or this product
That's just an example. Or let's say that you uploaded all of your random receipts for property taxes, and I put it into a nice little spreadsheet showing income and expenses by property. Individually, instead of all the individual receipts that were uploaded.
Hey, how much does that cost?
I don't do that.
I'm assuming we have a few staff that could do that, but okay. All right. So you have to really dial in on your accountant and or investor. I mean, I can fire you, you can fire me, right? I mean, you have relationships where things don't work out as well as you anticipate. What really bothers you when you're working with a client that you're not happy with? Or
I think it's if a client is not they're causing disruptions in your systems and your procedures and your staff, then I would definitely say that that's not an ideal client.
What's a disruption? You're too vague there, sister. Get to the point.
A disruption?
Like how? They're coming in there naked. Hey, I'm at the office with my receipts. Like, what do you mean?
They're dropping off shoe boxes and boxes of documents when that's not the procedure. Okay. That's an example.
All right. So everyone stops, scans everything. Stop, drop, and roll. Stop, drop, and scan.
Yeah. But I think what my 5 tips were. Establishing a good client accountant relationship. Did you hear me?
Yeah, I heard it. It went through. It was a little delayed, but I got it. Establish a good accountant relationship with an individual. All right. So what are those tips?
So the first one is agree on a mutual schedule. So meaning that, your accountant has a job to do, and that also means that you as a client have a job to do. Sometimes people hire accountants and they think we're just going to wave a magic wand and everything's going to be all buttoned up and beautiful, but it takes work for both parties.
And you're talking about like cleanup, I sold the house 6 months ago.
Even on a monthly basis, let's say, so the mutual schedule is we need your documents by the 7th business day of the month. Okay. Then that means, and then our job, we're going to have completed financials to you by the 25th of the month. Every single month.
Reconciled.
So that's what I mean by agreeing on a mutual schedule. That's the only way that your financials are going to be prepared on a timely and regular basis.
All right. So let me get this straight. I've never had this conversation with an accountant before. So I say, hey, when do you need all this? And when do I? So basically it's creating a sense of expectations. When am I going to receive my financials every month? So, hey, that's pro tip number 1, ladies and gentlemen. I want my financials by the first of the month from last month. And for me to do that, I have to get you all that information by the 7th, let's say. My mortgages are due on the 10th. So that kind of makes sense. We kind of button everything up by the 10th in my world. And then it gives you guys a couple of weeks to get your stuff together so you can.
Right. So that's your bank statements, your receipts, anything, HUD statements, anything that we would need to close a set of books.
So your client, this person that's going to interview accountant, they establish that on the front end. I've never thought of that before.
Ask that. When will my financial statements be?
So that's my question. So if I give you all the information by the okay, cool. All right. So ladies and gentlemen.
And that's like what you said, holding an expectation for both you as a client and them as an accountant. There's that, if he continues to do that, there's going to be fewer surprises when it's actually time to prepare your taxes. And then you're also, when you're bringing in your records in promptly, we're not waiting till the last minute. If you wait 6 months to do that, okay, well, now we're 6 months in arrears, and that's not.
Give me an example of my records. Don't you have access to my bank account? Don't you have access to this stuff? Like, what do you mean?
Right.
Is it because I made a purchase and I forget to forward the HUD to you, my closing statement? Is
that could be your records. Yeah. Let's say you refinance, we need the paperwork on that.
Okay. So acquisitions, purchases,
closings, purchases. Let's say you're using a property management company. They send you a statement every month of your rental
repairs,
income.
my costs, their percentages. Okay.
Yeah.
Cool.
So anything
so
like
all
that.
of everything that you would need to know, and then sometimes this is all automated. You already kind of get this stuff going for certain people because you have access to their bank account.
Right. But let's say that, if someone, let's say a new client is still working on establishing that trust, they don't have us. We can't pull their bank statements. Then that means that we would rely on them to provide them.
Let's just talk about that. What's the point? Like, what are you going to do with someone's bank access? Oh, wow, you have money in the bank account. I mean, like, I can't steal it. Why is that? Why are people delayed that? I don't know. Maybe I'm just too trusting. I know there's a lot of people out there.
Maybe you are too trusting.
Probably. But, I always had this thing. Money solves all problems. You just have to make more money. If you steal from me, that's cool. I'll catch that.
Yeah.
But like, why do people, I guess you do your own accountant, so you don't have someone you talk to. But I mean, it makes sense. I mean, I know I was like that though in the beginning. I was very I didn't want to say that I did this on the side.
I think that's part of that's tip number 4.
Okay, let's go to tip number 2. Go. Keep us on 20 minutes here.
Be prepared when you do meet with your accountant.
Did you make these up or did you Google these up?
I made this up. What are you talking about?
So you're telling me like I'm a grade school, like I'm telling Max today.
Oh my God.
Do you have all your together for class?
This is today? What I told Steven, what makes a good accountant is experience and pain.
All right. So
I don't think you like that analogy.
Let me tell you, let me translate that madness to this. For all you smart, savvy investors out there, this is what she's trying to say, Miss Schoolgirl here. Listen, when I first met with a new accountant, I had to write out all the weird stuff that happens. Why do I transfer money from my management company into my holding company into this? So this is what she's trying to say. Being prepared for that meeting, you want to articulate everything that your understanding of your business. Your accountant, they may be savvy like Rose. Like Rose knows real estate forwards and backwards. She's an investor herself. She knows what's going down. But she doesn't know that you own a trucking company, or she doesn't know that you have the Savvy Radio Show and you're trying to write off some marketing on a vehicle wrap. She doesn't understand. So you have to kind of outlay that information for you. What are the key things you think that someone needs to have prepared before they talk to you?
I think part of that is going to be looking at your financial statements every single month. So if you are working with an accountant monthly and you are getting financial statements, make sure you look at them, because that's really going to tell you what you need to ask. And remember that your accountant is not there day to day like you are running your business.
Well, I've caught $16,000 transactions and was keyed wrong because I didn't communicate to them, and I could have paid tax on that $60,000 repair.
Yeah. So let's say that here's a good example. You refinance and you put a large deposit into your bank account, but we don't have any information on this refinance. That could be counted as income when it's not income.
Taxable.
Yeah.
Damn.
So that's why, and we are human, so mistakes do happen. But if you are not looking at your financial statements, you're not going to know that.
Be prepared. Any big transactions, any nuances of your business.
And if you do meet with your accountant, let's say on a quarterly basis, or ask some questions that come up during that quarter. Or if you are thinking about doing something, maybe you're thinking about selling this property. What's that going to look like? Maybe I want to sell it CFD or versus selling it outright. That's one of the benefits of working with an accountant monthly is you can do that.
All right. So CFD is contract for deed. We've had a bunch of podcasts on that. So, and also it's an opportunity for the tax planning. I love that. I'm almost going to title this tax planning versus tax preparation. And I mean, those are two distinctions. But when we hear the word tax and the word accountant, we think it's just, she's going to do my taxes.
Yeah.
But you can, that's monthly process as well, right? I mean, that's full service.
Monthly is really preferred. You know,
so
when
you
you're,
adjust.
and the thing is accountants are let me correct, because remember I said earlier, there's lots of different accountants. Tax accountants are extremely busy January through April.
Okay.
There's not a lot of time there for tax planning.
Okay.
They are simply preparing tax returns and filing them.
So if I wanted to buddy up with you, when's the best time when we can connect?
This is the best time, like
so
June,
May
July
to September, for this window of opportunity.
Yeah.
Because you don't want to be calling you December 31st. Hey,
no,
I want to buy a brand new
really.
F-150. Can I write it off?
You shoot me a text message.
You need people. I remember this year, because I don't know if it was Donald Trump or whoever's going to rewrite the tax code again for the 10,000th time. That at least 4 of my friends bought new vehicles. Was it last year? Was that the last Advantage or something?
It wasn't. It seems to be like that's the time of year they're like, oh yeah, I got to get that done before the 31st. And
all right. So that's tip. So tip number one.
And this is about reviewing, being prepared and reviewing your financials. One thing that I just saw yesterday was the bank cleared a check for the wrong amount. And the bank did not catch it and correct it.
For how long?
So it was, we generally work a month after the fact. Yeah.
Oh, so a whole month went by and the bank didn't even catch it. And the
bank didn't catch it, which is rare, but it does happen. I've seen it happen several times with different clients. Where you write a check for $500. Well, that's their job. They should be reconciling.
This is a feather in your cap. Okay.
Sorry. Moving on, number 3.
Thanks for telling us that, ladies and gentlemen. They actually do something behind this computer screen somewhere on some planet somehow. All right.
Okay, cool. So and this is number 3. So listen and take our advice. Generally,
that's not true.
All good relationships are built on trust, and as your accountant, we are on your side. Right. I am not the IRS, and I am not the police. Okay?
I'm about to bust your ass. Here's the deal. That sounds great, but there's a lot of times that you and I have conflicts. I think I can do something, and you're like, I don't think you can.
Well, that goes with tip number 5. Don't be afraid to challenge your accountant.
All right, so trust your accountant to a degree, right? I think. Yeah.
I mean, you hired them for a reason. So trust them to agree. Your accountant should be your partner and they're on your side.
And not advantageous, not adversal, adversal. And I think a lot of my friends, they call me and how did you do that? A couple of years ago, I wrote off my RV and they're like, how'd you do that? Well, my accountant was very clear. You have to title it in the company name. You have to make it a legitimate business, have a third party RV manager that manages the property, and you can only drive it 2 weeks of the year. If you want to drive it more than that, then you're going to have to rent it from the company directly. But then some other accountant might think, hey, I don't think that's a good idea because he's real stuffy and, doesn't want to take any risks. How do you and how do you guys have a little party in the back room and say, okay, we're going to be aggressive this week and we're not going to be aggressive next week? And then how do I know the intensity of your pain versus my pain? How does that's a real question, because I have friends that say you can write that off. And then I have friends that say, no way in the world that I wouldn't do that.
Right. I mean, it's your accountant's job to make sure that you are staying compliant with all state and federal laws, but while also paying the lowest amount of tax as legally possible. So sometimes I think accountants can get complacent and not want to do the work maybe to make something like that happen. But it also falls on the client too. That's where I said, listen and take our advice. If this is what you really want to do, then you have to realize, okay, this is all the risks. If you don't follow this advice, this could happen. I think it's just having that
relationship,
that relationship and those conversations.
I was talking
we could go right into that, but like I said, don't be afraid to challenge your accountant, especially if it's out of the ordinary.
It's interesting. The tip for you, I guess, as an accountant, maybe for your clients, but I was talking to you get to a certain net worth and there's a certain time, like you just can't write off everything. But this one super successful investor said, hey man, you need to get with your accountant and which is the best way to take these deductions and or losses. And he said it this way: through passively losses, like once you just buy a syndicated deal and you can take passive losses as a group. And I was like, I remember I called you on that once and I was like, hey man, I took a huge loss through this apartment building that I bought. And I love that he brought that up because I don't even think that way because I'm just now getting into that type of arena.
Yeah.
Is there different types of losses for like earned income as a loss? Because that would be like an expense, not a loss. And then there's passive losses like this apartment. Can you define?
Yeah. I mean, I think that's a good topic you could spend a lot of time on that, but
okay.
And here's one thing I will say is the tax code is dependent on your individual situation. So while one person, your friend, may have been able to take this passive loss, you may not be able to because of X, Y, and Z. So
and that's why he said you need to talk to her. He was referencing you because I was like being aggressive in this one area. Interesting. And it's like, opportunity zones too, like those work opportunity tax credits. I mean, I have a client that only hires felons for that tax credit. So, I mean, there's a lot of different things out there, and so going back to it's okay to. I think it's good to do your own research and say, hey, bring this up to your accountant. I think this might apply to me. Can you look into it? Because remember, like I've said before, the tax code is 5 times longer than the Bible. I do not know it all. Well, it's interesting. I think that your heart is that you're willing to learn and make mistakes, right? Or at least dive into it and not just not make mistakes, but that's probably not the way to say it. But I mean, because most people are just quick to say no, because I get a big picture now because they're busy. They have specific clients that they are like, say, a doctor, right? It's real simple to do with his money, kind of. And they don't want to they don't know, they haven't learned this more of aggressive approach. And you're willing to kind of dive in a little bit, right? Like international business. I've overheard you like get all upset about that. And, it makes sense, right? Cost setting.
Yeah, and I
there's
think
so many strategies.
What's also good is, when you're looking for an accountant, a good one will know when to say no to.
Yeah, I hear no a lot from you. I'm done with that.
That's out of my wheelhouse, and I would be doing you a disservice if I offered to do that, to take on this work for you.
Right, because you don't know per se perfectly.
And
right,
I'm not at a point where I have the capacity to do that.
Right, so. It's just like, what's a reverse 1031? Like one of my homies is like thinks he's all super duper, and he's doing 1031s. But reverse, because he's always pushing me to do it, and I want to do it. I'm not that organized. I'm not that detailed. Like people just walk up and buy my house at 30%, 40% more. And I'm like, hey.
Well, and I mean, a lot of times people, business coaches and gurus and every different people talk about these fancy tax, I'm going to say, quote unquote, tax strategies without giving the backstory to them. And so people get amped up and they say, oh, I want to do this 1031. I want to sell this contract for deed. Well, it may not work out for you. You've held that asset less than a year. Contract for deed is probably not a good idea at this time. Just
right. And you've already had a contract for deed. You've already declared it as a sole property.
Keeping that communication open and trusting your accountant.
All right. Come on, we're running out of time. Okay, number 3. Don't get comfortable.
No, this is number 5. So you're all.
Wait. We're on number 3.
We've already done 4.
What? Go through them again. Number 1.
Agree on a mutual schedule.
Number 2.
Be prepared.
Number 3.
Listen and take our advice.
Oh yeah, I ignored that one. All right. I ignored
Classic.
number 4. All right, number
Okay,
4.
last one. Number
Number 4
4 was don't be afraid to challenge your accountant.
Damn right. We didn't get into that.
Yeah, we did.
All right.
Especially if it's unusual. Like, if you've done your own little tax research, I want you to bring it to me and say, "Hey, Rose, I think I could qualify for this blah, blah, blah credit." Okay.
Yeah, the agricultural credit. I was trying to hustle on.
I'm going to do this R&D credit. Okay, let me tell you what you need to do to get this credit.
Yes, and we did. We researched this we zoned this property agricultural so we could take all these deductions. I remember, and you pushed it back on us, and we got it, and you agreed, and we got it done. All right.
Okay, so lastly is be transparent. So yes, tell them everything about your business. Let them know any problems or challenges you're facing. Yeah, divorces.
File but jointly, separate but jointly.
Anything you're thinking about doing in the future, maybe that might affect your business, instead of just doing it and maybe whatever you decide to do has created a large tax problem. Perhaps.
And let me say this, and it's not you're seeking advice, you're just letting them know, because I think a lot of people don't tell people is because they don't want to hear no. Hey, I want to go buy this RV, and you don't think it's a good idea. I don't really. That's why I think a lot of people hold things back, right? And I think my relationship with you as an accountant has fostered that. It's just an amazing process, and that's why I want to do this podcast. It's like, guys and gals, you may think something differently. If your accountant makes you feel uncomfortable about doing something, that's probably not your accountant. And I know, because I was so insecure how I got here, and I was not ashamed, but hey, I'm going to go buy this McLaren or something. I'm not going to do that, but I'm just, and they're afraid to tell their accountant that they're about to withdraw X amount of money, which that's fine. It's your money. You're going to pay tax on that somehow or whatever. Mm-hmm. I think you need to elaborate on that. How do you soften someone? I know, because you're an entrepreneur. I know that you're an investor. I know that you own a business. I know that you have the same mindset. So now I love some of the key questions that you do ask me, and then but the reality is, how do you get someone to open up in that regard? Because I think they're really afraid to tell you, because you're going to say no to them. I believe, I don't want to tell you that I only have $50,000 in the bank and I'm about to go spend $50,000. I'm going to be broke. Yeah. It's not a good financial, because you're not a financial planner.
No, I'm not. And I'll never claim to be, but I think that comes from working together and for getting into a good ebb and flow and being able to build that trust. Your accountant's not judging you.
It feels like it, though. They have access, like they see all my transactions. They see what I buy on Amazon. They see why am I spending this money? Their paycheck could be different than your paycheck. It creates a dynamic of insecurity, and it's true.
Well, I don't. Yeah, I can almost guarantee that that's not their mindset.
No, not in the bookkeeper, accountant, CPA's mind, right?
Mm-hmm.
But I'm just trying to give you perspective on our world,
right?
Because like, say I buy a new McLaren, half of my friends, they'll be like, "Good job, well deserved."
Yeah,
23 years grinding it out. The other half, I can't believe you spend that money. You're going to go to hell. I don't know. I'm just saying.
You probably need to get those people out of your wheelhouse.
All right. Yeah, I'm just saying. But I'm just trying to give you a scope of.
I get it.
What's going on in their mind. But I realized, if you truly trust people and they're in your financials, there's no fear in my mind. Yeah. They may look at me a little bit different because my underwear is $6 a piece, but I'm not going to get mad about it that they buy $2 underwear that are Hanes.
I think that, if you keep your accountant in the loop, that allows them to think proactively for you. And a good accountant has worked in many different areas of businesses and can probably provide a lot more insight than you even think.
Well said.
So
you got your little stinger out. All right, little beeps. It's true.
So
I just think we're just insecure people. I think we just want to be honest. They don't teach you how to hire an accountant. Mm-hmm. They don't teach you how to handle, $100,000, $500,000 transactions in high school or college, right?
There's a lot of things they don't teach in high school and college for a reason.
I don't know why. But the thing is, we may be at those points and you don't know how to articulate those. You don't know how to move forward. How do you get to $10 million status? How do you get to $1 million net worth? I think that we're all self-taught. We're going down this road together.
We are
trying to be the very best. And you pick up the team players that you on the way on this journey, and you drop off the deadbeats. And
well said.
I'm just saying, guys and gals, it's the time to really work on your numbers. This whole podcast was, there's just people that can afford monthly bookkeeping, and they don't do it. And they, at the end of the year, they're like, why is my tax burden 40,000? Is because this could have been corrected if you would have just did your stuff in the row. And we're not saying go with our firm. We're just saying you need to really, and the guys that struggle in my world don't feel like they don't have time to look at their financials. And it's painstaking. It's painstaking that I read financials on projects I'm involved in that take me 30 minutes, and it's 200 pages, and it's ballistic, a 280 apartment building, but I do it.
I think and this kind of leads into business coaching, but once your financials are solid, that then allows you to take a step and say, okay, now I want to develop my dashboard. What are my KPIs as a business owner? What are my goals as a business? You're not going to be able to set your KPIs or your goals unless you know where you're at right now.
I just think it's critical. I think that, business 101, you need to spend some time in your finances on for sure a weekly basis on a minimum. And I'm just going to throw this out there, a minimum of an hour a week, just kind of getting your financials in order, getting the nuances together, looking at financial statements. If you have an account now, I was that guy. I just got a whole stack of insurance and I just throw it on the curb and I don't care about it. You need to open the envelope or open the email or go to your portal and download your PDF that says profit and loss or a balance sheet or reconciliation, whatever, and see, what transactions. I've seen so many transactions that have gone through that my accountant didn't see, that I didn't charge. And if I didn't have this Monday meeting with my team, I wouldn't be where I am today. And it's not even with you. I have my internal accounting.
For sure.
Then,
yeah.
I have different accounting practices at a different sizes, but you as a single 1 or 2 units, you can get adequate accounting and get in the habit now. Because if you can't get this stuff correct today on 1 unit, how are you going to get to 500 units? How are you going to, it's a simple biblical principle. If you can't handle $10, there's no way in the world you're going to handle $100. So you got to look at it like that. And you got to put the time in now on your accounting. When you become, you don't have to be a CFO, but one day you may need to hire one. Ooh, come on. Yeah. That's me.
No,
that's where I'm at. I'm not real passionate about accounting. I don't like it.
No, there's things as me as an accountant that I am not good at. And I throw it to the side of the curb.
Well, it's like, I love our relationship because you hate property management. And I'm like, every time I'm like, I love this. How do I handle this? And you're like, but it's the same thing. It's opposite for you on a taxes. I'm like, okay, what's a K1 really do? I just think it's just find the people in your world that you can both serve each other. I love encouraging Rose and her endeavors. She does the same thing for me. I think you need to find that type of person in your world. All right. Final thoughts. We're done. Is that it?
That's good. If you have any other accounting questions or
how do people get a hold of
concerns?
You? What's the best way? p3accounting.com or because you don't
email.
Is Instagram okay? No.
Just the website.
All right. So p3accounting.com. Hey, you can always contact me, savvyinvestors.com. I'm open on Facebook. I'll friend you, maybe not, but I've learned. No, but hey, you no question is wrong, and I would love to do a monthly podcast. And in Rose, I see her. I work in the same building as her. I see her give a ton of time, usually only 15 minutes. She has this window of 15 minutes only, but I hear her all the time on the phone, just helping just the simplest questions, And, you should ask those questions. They can be as minute as like, how do I set it up to, hey, Rose has experience in 1031s. And so, because I asked you about the reverse 1031 and, I got this like 3-minute speech of not to do it. But the reality is all questions are good. And so if you have some questions, email and we'll get them on the radio show, and, maybe we'll give away a free book or something. If you send us a question. Anyway, thanks for tuning in, Rose. I know you're very busy. Appreciate the 30 minutes. I know you're pissed now, but that's okay.
Thanks.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.